Welcome to the Cardinal Commentary for the foreign equity portfolios. With fast rising inflation and interest rates in the first half of 2020, there's been a lot of talk about the global economy falling into recession. Some media coverage considers it a bad thing, but remember, it's totally normal, as recessions happen on average of every 4 to 5 years. It's impossible to predict the ups and downs of the market or geopolitical events such as the war in Ukraine. We recommend focusing on what you can control, such as an investment strategy that you can stick with through thick and thin. We believe investing in companies that can grow their revenues and their dividends no matter what the economy is doing is the cornerstone of every successful strategy. In the back half of 2020, our investment team believed that value stocks were poised for a significant run of outperformance over growth stocks, reversing a decade-long trend. Here's portfolio manager Terry Wong.
It was the second half of 2020. When things started to turn, it was just starting to turn, we were talking about, this could be a multi-year value investing outperformance over growth. And it's only been a couple of years so far, but I think that this is what's going to happen. I think the value type of investing, the value stocks that we invest in are going to perform much better versus, the higher growth, higher multiple stocks.
One of our companies is VF Corp, a US-based clothing company that owns the North Face, Vans, and Timberland brands. Its share price has already factored in a recession, and we believe the strength of these brands, plus VF's track record in acquiring companies, could produce an additional 10% growth in earnings and dividends. And that's on top of the current dividend yield of 4.5%. VF is currently trading at 13 times earnings. That's the share price divided by its earnings per share, which is well below its long-term average of 20 times earnings. If its valuation simply returned to historical levels, investors would gain another 50%. Portfolio manager Sheila Wilson-Cole believes VF is representative of all of the companies in the Cardinal foreign portfolios.
There's a lot of companies in the portfolios, such as VF Corp, where we see a tremendous amount of upside and really good value. So VF Corp, for example, it's trading at a multiple that is, actually below its normal range. It's definitely at a more recessionary multiple. And it pays a solid dividend on top of that. It's about 4.5%. So when you factor in that we still expect good earnings growth from VF, approaching 10%, you get a 4.5% dividend on that company as well. And then if that multiple re-rates, so goes back up to kind of a mid-range multiple even, we could see potentially a 50% or higher growth in VF Corp in the next 2 to 3 years. And that's really, there's a number of companies in our portfolio that fit that same mold.
VF recently released its quarterly results, highlighted by revenues of $2.3 billion. That's up 3% from a year ago, a return of $194 million to shareholders through cash dividends, and an outlook for adjusted earnings per share of $3.05 to $3.15, representing growth of 4 to 7%. It's no secret the S&P 500 fell into a bear market during the quarter. That's a 20% drop. But our foreign portfolios preserved capital better than the benchmark. Ultimately, we believe we'll be rewarded because our companies are continuing to grow their revenue and their dividends. Over the last 20 years, the foreign portfolios have returned 8.01%. That's ahead of the index's 7.32% over the same time period. There's some good news on the inflation front, as some economists believe it peaked in June. Gas prices have fallen 20% since then, and the prices of many other goods, such as lumber, minerals, and grain, have also fallen. Here's some more good news. 14 companies in our foreign portfolios have raised their dividends during the first 6 months of the year, led by NXP Semiconductors at 50%, Wells Fargo at 25%, and Comcast at 8%. That also includes Medtronic this quarter at 7.9%. And why do we do all this? Because it works. And that's the Cardinal Commentary for our foreign equity portfolios. Thanks for joining us.